Hello everyone and welcome back. My name is Greg Furman and these are the market positions for July the 12th, 2017. Now our first trade for tonight is going to be again on the Forex market, specifically the US dollar Japanese yen. Now what we're looking at here is a counter trend short position, much like what I talked about in this week's Forex Weekly Outlook. We're looking at a critical resistance area that's coming in at or about the 114.50 area. Now the VantagePoint indicators, we've had a long period with our neural index going at 1, but it's recently gone to the we've been at 1, but it's recently gone down to the 0 level. Now our predicted RSI is in heavily overbought territory, and once again these cycles in the dollar yen usually last, as I've talked about in the weekly outlook, about 16 to 18 days. So you can see here that again we're going up for 16 days, down for about 16 to 18 days, then back up again. So we're repeating this cycle. Now some traders will assess this with Elliott wave or Fibonacci. I'm not in that camp here, guys. I'm in the intermarket analysis camp, and in that camp it tells us that as some of the commodities start to rise, usually the Japanese yen goes with that. For example, gold, oil, some of these different things. But the main thing we want to look at is the key VantagePoint indicators. We are grossly overbought here. We can assess this, as I talked about in this week's Forex Weekly Outlook, if we connect the dots to a previous move here that was a great call from VantagePoint when we hit a top at 114.50. We went all the way down into the 109 area. So once again, this same signal from VantagePoint is forming yet again. So why would we not try this? So when we look at, again, combining price action here with that swing high, the overbought signal, the predicted short, medium, and long-term differences all moving sideways, the shorter-term indicators pointing down. This is what we're looking for here, guys, for potentially not just a short-term trade, but a longer-term trade. Now, our short-term indicator from VantagePoint, again, is struggling to stay to the upside. The medium-term and the long-term predicted difference, again, the further we move away from the black line, the more likely we're getting ready to retrace here. So based on this, we then, and only then, guys, we go into the daily report to fine-tune our entry point. So when we look at all of this, again, this is pointing towards a potential short. So with another significant failure at the 114.40 area, for tomorrow we're looking for a minor retracement to 114.29. We're then going to target 113.68. Now this is a counter trend trade, absolutely, but again, when we combine the indicators with VantagePoint and the price action and the repetitive signal that we're seeing here, we absolutely want to take this. Now our stop here, guys, we're going to keep it fairly tight, 115.05. We never want our stops on a round number at, say, 115. We would always go 115.05, 115.10, because exotic options, barrier options, they're very active in the Forex market. So, and they're always pinned to round numbers. So we stay away from that. We put our stops above 115, and then we look for a bigger move back down into the 112 area. Now our second trade for tonight is going to be in the ETF market, specifically the ProShares Short S&P 500, the SH. Now we were doing this one last week. We're still looking at this particular ETF here, guys. If the dollar yen signal is telling us that the dollar yen is probably going lower, then that means the global equity markets are likely going to follow. So that key intermarket correlation is a driving factor in determining whether we want to buy or sell equities. Now, when I look at this, our key VantagePoint level is coming in at 133.43. We're just going to bring this up so everybody can see this. Now, our position of the neural index is still down, but we're using this area around this key VantagePoint level, 33.43. We've closed at 33.45, but the S&P is basically stalled, right, in that same area we've been trading for the last couple of weeks. So there's very little buyers in the S&P 500 right now. So we look to take the position on the opposite side of that. Now, again, this is a choppy counter trend position, but if we look at this, you can see that we're holding below the zero line on the predicted MACD. The predicted RSI is unable to stay, it's unable to break below 40, so we're looking for it to extend back to the upside, and we're looking for a bigger move on those equities to the downside. So once again, we look at the daily report, very, very powerful tool from VantagePoint, giving us our predicted high and predicted low for the next trading day. So with a close of 33.45, we're looking for a very minor pullback to 33.23. We're going to target 33.56 initially on an intraday basis only. But the bigger move, if this channel breaks, and I believe it will, to the upside, then this would leave us with a target back towards, again, this swing high, which would be in or about the 34.70 area. So again, if we can get moving on this and the equities actually have run out of steam, then this is a very, very good trade. So what we want to look at here is where to put our stops. We want our stops below the most recent swing low, down around, for the sake of rounding things out, I would put all stops below $33 per share. And once again, if we look at this particular ETF over the last 6 months, even within the last 6 months, this particular ETF was in the $36 per share mark. So again, some very good opportunity here. It just requires some patience and studying those key VantagePoint indicators.